Good morning, traders. This is Rick Majors here at Opteck.com, and welcome to our daily market briefing. Today is, of course, the 3rd of April 2014, a wonderful and not so sunny Thursday here in the good old London. We have an amazing day in front of us. This is the Thursday we've all been waiting for after last month, and especially how the American market has not been reacting nearly as well as we'd liked it to. This is going to be the opportunity that's going to push things back to good volatile state, but with a stable market at the same time. Now, we have a lot of things happening today, so pay close attention. There's a lot of things you're going to want to be keeping an eye on. First of all, the gold market. Prices have gotten cheap enough that have triggered a buy-in by the Chinese government. They like to buy in bulk, and they like the prices to be cheap in order to do so. Last time they did it, it did get down to about $1,080 before the rallying spur that was triggered by the buy-in actually happened. All right, we saw a price jump of about $200-300 there within the first month, so we can expect some sort of momentum to pick up from there. We'll see how long that lasts. Coming up in the events today at 9:30 a.m. GMT, we have the Services PMI. Again, PMIs are very important because they deal a lot with economic growth and stability within a given nation. All right, so we're looking at the British pound right now. The economy here is not great, but not horrible. There's a lot of internal issues that are kind of slowing things down. It just becomes a very sluggish process. But with the Services PMI, that's talking more about the service industry, and you can take a look at this here. All right. You know, these are things for restaurants, for hotels, this stuff. You know, how much is the consumer spending and how much is the service industry required, obviously, to increase its supplies and its purchases in order to compensate for that. So this talks about consumer confidence and interest as well. All right, 12:45 p.m. All right, that's noontime, obviously. All right, we have the minimum bid rate here. I'm not expecting this to make any overall changes. As you can see, it's not one that's looking to change. The bid rates here, they have the ability to change. And we can see here that back in November 2013, they actually did drop. We may see a rise by 2015, but I'm not seeing it now. All right, it's going to be happening in the States. Europe will probably follow as recovery speeds up. But at this point, we're looking at probably a stable 0.25. We have the ECB Press Conference also, which is going to be starting there. Okay, this is a big deal. All right. We have the ECB president, all right, and the vice president speaking. All right, and you can see here, again, these always start the same way. First, a prepared statement is read, and then the conference is open to press questions. The prepared statement has its own power. And of course, this is where they're getting a lot of the important information out of the way. So if you are watching, you can go on Bloomberg, usually watch it live, or through a variety of media channels in order to get a look at it. The prepared statement is very important, and then the questions afterwards, journalists and media representatives will use these questions as a way to pry further information out, and market investors keep a very, very close eye on this. So you will see market movement result from both pieces. All right, then we're already looking at trade balance on the U.S. dollar and unemployment claims. Unemployment claims, for all intents and purposes, are set to drop. Now we have an estimate here of 319. I say it's going to drop. I want to see it go down, especially because the ADP from yesterday ended up being pretty good. And actually, let me just refresh here so I can give you guys a correct rate. ADP ended up being 191. All right, it was not expectation beating, but it was very good along the terms in which it needed to be. All right, this means that we're seeing a very nice employment change here. 191,000 jobs on the preliminary should have been created. All right, we're looking for a number even bigger for the NFP tomorrow. But unemployment claims should be going down then if there are jobs created. We might not see it this month, but we'll definitely be seeing it. Sorry, not this week, but we'll definitely see it next week. So if it doesn't happen now, look for it next week. Trade balance also, it should be starting to go down again as economic recovery, stimulus, and these things are starting to really take some progress. We should be seeing the U.S. government trying to clear its accounts out a little bit, minimize debt. All right, then at 3 p.m., Draghi is going to be speaking. All right, this is a second speech in addition to the ECB Press Conference. All right, keep an eye on this again, because if he's giving another prepared statement, it's going to be dealing much more specific monetary policies in terms of the European Union's economic future in the next couple of months. All right, and then the last one, important for today, is the ISM non-manufacturing PMI. Anybody who knows the ISM already, this is a major deal, especially for the US dollar. It's the Institute of Supply Management. For those of you who don't know, you can read it all here in the folder. All right. The next one's coming out on May 5th, my birthday. So it's going to be a while before this happens. In other words, this is a relatively irregular one. It only happens once a month. It's going to be something very, very important to keep an eye on. ISM manufacturing PMIs are still dealing with PMIs. Purchasing Managers Index talks about economic strength. All right, this will be something very closely watched, especially with the pressure that is on the American economy in order to progress out of recession. Do not forget that Friday is NFP day. All right, tomorrow is going to be a major trading day. We are expecting very, very large movements in the market. We might even see a bit of a slowdown at the end of today after about 4 or 5 p.m. GMT, just so people can prepare themselves for tomorrow. So be there, stay tuned, and make sure that you are there at 1:30 p.m. GMT for the non-farm employment rate. We're also getting Canadian employment change and employment rate and the US dollar unemployment rate as well. A lot of stuff is going to be going. It's going to be a very high volatility period. It's going to happen in a very short amount of time. So quick trades, quick decisions, and lots of profit to be made. Anyway, guys, again, thanks for coming in and listening to our daily market briefing. My name is Rick Majors. If any of you have any questions in regards to the daily market briefing or any of the other operations here at Opteck.com related to your trading, feel free to contact me at rick.majors@opteck.com or via email at rick.majors@opteck.com. Don't forget to hit like and subscribe to our video, and come and watch the daily market briefing every day at 9 a.m. GMT, Monday through Thursday. Have a wonderful trading day, guys, and good luck.